All right, welcome to The Explainer. Today we are jumping right into a super high-stakes situation with the stock RZLV. Seriously, this is a classic battle of the market giants, the whales versus the bears. And the way it's set up, it's a real powder keg. So let's kick things off with a massive number. 80 million. That is the number of shares that are reportedly locked up by huge institutional investors. You know, the whales. Just think about that. 80 million shares just taken right out of circulation.
Okay, now let's flip the coin and look at this. 51%. That's the recent short volume. Let that sink in for a second. More than half of all the trading activity has been people betting against this stock. The bears are trying to push it into the ground.
So what you have here is a collision course. You've got these giant funds holding the line, creating this massive floor. And at the exact same time, you've got short sellers piling on insane pressure from above. It really is the old question, right? What happens when an unstoppable force meets an immovable object? Let's get into it. This whole situation has created what analysts are calling a powder keg. It is just an incredibly tense setup, and it all comes down to a really basic concept in the market. The stocks float.
So the float is basically the pool of shares that are out there for everyday people, you and me, to buy and sell. By taking 80 million shares and locking them away, the whales have made that pool a whole lot smaller. I mean, way smaller. Those shares are now in what you'd call strong hands.
And this is where it gets explosive. If some good news hits, all those short sellers are going to have to scramble to buy back shares to avoid huge losses. But where are they going to get them? With so few shares available, that sudden buying pressure could send the price through the roof. And that, my friends, is the recipe for a short squeeze.
So you have to ask, why are these huge institutions making such a massive bet? I mean, this isn't just a random gamble. There have to be some real, fundamental reasons they're digging in for a long fight.
And here is the absolute crucial point. Unlike a lot of those retail-driven meme stock plays that can just, vanish overnight, this whole thing is anchored by a legitimate business that's actually growing. That gives this situation a much, much more solid foundation.
So what's got these big players so interested? Well, two major things. First, they just snapped up a company called Crown Peak, which is set to add about $70 million in annual revenue right off the bat. Second, they're going global with stablecoin payments, which is a massive play in digital commerce. But the real prize, the end game for these whales, is tied to this number, $500 million. That is the company's stated goal for annual recurring revenue by 2026.
And ARR, well, that's the gold standard for institutions. It means predictable, stable, subscription-based income. It's not about one-off sales. Hitting $500 million in ARR, that would be an absolute game changer. And that's the prize these whales have their eyes on.
Okay, now for the wild part. Even with this really solid long-term story, the bears are actually doubling down. They see all this institutional money pouring in, and they're still betting that the whole thing is going to collapse. They are just relentlessly trying to hammer the price down. And this creates a crazy amount of risk, because they're doing it right as these huge funds are building this massive, illiquid floor beneath the price. It's an incredibly bold, and you have to say, very risky strategy. So this brings us to the first of two possible scenarios that analysts have laid out. This is the bullish playbook, right? The what happens on a green day plan if the stock starts to move up. And the plan is crystal clear. The analysis says the number one trigger to watch is a break above $2.85, and it has to happen with a lot of volume. That's the tripwire. If that happens, the next target is $2.95, and the big goal is a breakout all the way up to $3.12 to fill a gap on the chart.
Now, what could set this all off? Well, any kind of positive news could be like pouring jet fuel on the fire. A good press release about that Crown Peak deal, or maybe announcing a few big new contracts. Either of those could easily be the spark that gets this thing moving past $2.85.
Okay, but what if the price goes down instead? This is where the analysis gets really smart. The plan isn't to just panic and sell. It's about understanding what they're calling the whale trap.
So the defensive strategy is all about watching key levels. The first line in the sand is 270. If that breaks, the next big test is 266. But according to this analysis, the ideal patient entry point, the trap, is down in the 250 to 253 range. That's where you'd expect institutional algorithms to step in and defend their positions. Hard. And the signal you'd want to see in that zone is something called a hammer candle. It looks exactly like it sounds. The stock gets hammered down, but then buyers come roaring back in, pushing the price all the way back up to where it started. It's a powerful signal that the whales have rejected those lower prices and are taking back control.
So let's just put it all side by side. You've got the current price of around 279 acting as the pivot point. If it goes up, the breakout starts at 285. If it dips down, the trap is set below 266. Two totally different game plans, each with its own specific triggers and targets.
When you boil it all down, this is just a classic market showdown between long-term investors and short-term traders. But what makes this so fascinating is that the battle lines are so clearly drawn. There's a playbook for both sides of this fight.
So the big takeaway here isn't about picking a winner. It's about understanding the incredible forces pushing and pulling on this one stock. And it leaves us with one heck of a question. When a patient, long-term giant is in a cage match with an aggressive short-term predator, who's going to blink first?